Alrighty, guys, welcome to tonight's session. It is Monday, July 24th. Hopefully, you guys are having a good day, ready to get the session started, answer some questions. So let's jump right in. So first thing I want to talk about is the overall bias going into the day, kind of run through the action, run through the trades that we took. What we see, what we not see. Is there anything, we could have taken that we maybe didn't see in the live session? So the first thing I want to review is the overall action on ES. So like we were just talking about, going into the morning, there was a really nice long setup. And I do want to replay this because I want to talk about the possible longs here on ES. Now, I was bearish going into today from last night's charting session. But when I opened up this morning and I did see the action in the overnight session, I did have a bullish bias going into the day. So I want to talk about why I had a bullish bias going into the day. So the first thing I want to look at is looking at this 1 hour. Going into the day, we had a big move in the morning due to actually no, this wasn't a news candle, was it? But we had a big move in the overnight session, having this kind of break of structure right here and creating this 1 hour fair value gap. Now, notice we didn't sweep this low, so why am I bullish? Because at the time, we are forming SMT here. So we were forming SMT, meaning that at that time, NQ was making a lower low while ES is making a higher low. When we get displacement back up, what is that telling me? The draw on liquidity becomes whatever these previous highs are. So this is a perfect buy model on ES. So that's when I zoom in, right? Overlapping models like we talked about last night. Again, so looking at the 1 hour, I'm bullish, right? Okay, now what do I need to look for me to take some sort of long trade? I need to see some sort of internal model start to form. So the first thing I'm looking for is just to see price retrace into that fair value gap. All right, boom. Price retraces in that fair value gap. Okay, now what am I waiting for? I'm looking to see displacement back up, and I'm looking to see a bearish fair value gap get disrespected. So right now, the draw on liquidity is this previous high, right? This is now becoming our low-hanging fruit, right? We know that this is going to come back to, we're forming bullish model. We're coming back to this fair value gap. Did we retrace back to discount? We did retrace back to discount as well. So we've retraced back to discount. We're pulling back into this fair value gap. And now I want to see something get disrespected. So let's see the rest of the action. All right, we get a move back up. All right, we have this bearish fair value gap. Notice this isn't getting disrespected quite yet. Still respecting. Boom. This move back to the upside is now validating my long bias. Notice we sweep internal here. We sweep internal here. And now starting to get a move back to the upside and running right through this bearish fair value gap. Again, if I am bearish, I should expect this to hold and then go back lower, right? But now on a bigger time frame, again, my bias is bullish. We've SMT at the lows. We've had a big move up on a bigger time frame. We've retraced back to discount on a bigger time frame. So now looking at a 5-minute, if I can see bearish fair value gaps getting disrespected, because again, this is an intraday short-term downtrend, right? So we're trying to catch and figure out when this downtrend is going to end, right? So notice, we're continuing to the downside. Notice what's getting disrespected, right? We have a massive bullish fair value gap, right? We end up going right through this because we never retraced back to discount yet. Of course, we're going to go right through that. But now we've retraced back to discount. We've swept internal, and we touched that bigger time frame 1 hour fair value gap. So now I zoom in. I'm saying, okay, I need to see what's being respected, what's being disrespected. First thing is this 5-minute fair value gap getting disrespected. This is when I zoom in. I zoom in and say, okay, now what would be my entry here? Well, looking at the 1 minute, I can actually see that 5-minute fair value gap lines up perfectly with that 1 minute inverse fair value gap. And this seems to be what would be our market structure shift now, right? This is the first high that gets taken with big displacement, right? So now what would be my long entry? My long entry for this would be a pullback into this inverse fair value gap, as well as we're in this 1 minute fair value gap here as well. So what would you wait for? Pull back into that inverse. That would be my long entry targeting buy side. So this would be a nice long targeting buy side. Again, letting your runners go to whatever that external high is. You could put your stop at the low. And again, looking at the 5-minute chart, we've ran through this. We've reached discount, break a structure on a smaller time frame, pulling back into that inverse. What do we expect to see? We expect to see that inverse hold. And you can see we end up holding. And there's actually multiple opportunities to possibly get in long here. Looking at the 5-minute here, we also had that 1 minute get swept. Now, I wouldn't look to take that 5-minute. I would look to see those internal lows get swept again. If there was, boom, right there. That is when I could possibly add to my long. Because we come back down to that 5-minute fair value gap. We sweep those equal lows, then get big displacement back to the upside. Again, draw and liquidity is still those highs there. And then you can see right at the open, we get a big move through that level going straight towards that buy side level, right? Perfect long model here. Now, unfortunately, I didn't take this trade because it was pre-market. I wasn't looking at the charts by the time we did come in here. But going into the open, I did have a bullish bias based off of this overall structure. And that would have been the trade that you could have taken in the pre-market session, targeting that overall buy side liquidity. Now, the reason why I was not too focused on shorts at this time, right? So markets opens up, we get a big move to the upside, and we end up sweeping this 15-minute high. Now, what do I look for when I sweep a 15-minute high? I'm most likely looking for shorts. I want to see displacement back to the downside, and I'm expecting. Now, the only reason I wasn't confident taking shorts here is, number one, this high to me is internal buy side. This is really that external high that we're aiming for. This is the distraction, in my opinion, because if we go to a higher time frame like that 1 hour or a 4 hour, that high is non-existent. There's really no high here. That is the overall high that we're really paying attention to. So I am not expecting this to be the draw, but this to be the draw. So a lot of the people I'm expecting that are going to take shorts here are going to get trapped and eventually get pushed back up to whatever this high is, because in my opinion, this is where resting liquidity is. Now, there is liquidity here. You can see we did get a possible short setup. You can see we came up, continue to sweep, get big displacement back to the downside, and we did getting a nice sell-off to that previous low here. But we never ended up taking that initial sell side level there. And then we get big displacement back to the upside. So now, once we get this big displacement back up, I'm expecting the draw liquidity to be that previous high, right? If we just came back down, the 5-minute just got ran through, we never even took that initial low, I would expect the draw to be this low. But since we just ran all of these bearish fair value gaps here, I would expect the draw and liquidity to be lower. Or to be higher, sorry, right? Because this overall high, if we just swept this high and we get big displacement back down, that means all of these bearish fair value gaps here, I would look to get respected, which we don't. We end up running right through them, right? What does that tell me? The draw and liquidity is going to be that external high. So pretty much the entire day, up until this point, I'm not looking to take a trade. Again, ES is just chopping. The only thing I'm looking for is this 5-minute fair value gap. I'm expecting this to get filled, right? We haven't come back to this yet, right? We have all of these stacked lows right here. We know that there's a lot of resting liquidity down here. And this is kind of in my head at this point in time. I'm expecting this to possibly become a future target once we take out that buy side level. So I'm waiting on ES. Again, there's no trade up to this point. Waiting. In the PM session, finally, we get that taken out. And at this point in time, I'm still not looking to take any short, right? I need to see a lot of displacement to the downside. I want to see selling pressure. I want to see a big move to the downside, right? Looking at the 1 minute, there's really nothing here. I'm still waiting. I don't want to take any sort of shorts yet. I don't want to take any sort of shorts. Oh, there we go. Nice, right? This is the first point in time where we're actually starting to get displacement to the downside. Notice, looking at this 5-minute chart, we sweep 15-minute high. Notice, there is no follow through here. This is exactly what we want to see for a sweep of liquidity. Notice, there's not even a single candle close above this level on a 15-minute time frame. This is exactly what I want to see for some sort of sweep of liquidity. Now, if you think of the markets in simple terms, right? This is what I want you guys to think about. All we're doing when we look at action is moving from PD array to PD array, right? That's all we're doing. We're moving from fair value gap to fair value gap. We're moving from high to low. That's pretty much all it is. When we go to high and we sweep the high, what are we going to? Whatever the opposing liquidity pool is, or whatever the opposing PD array is. In the opposing PD array, that looks clear to me looking at the screen, is this 5-minute fair value gap. We haven't tapped into this yet. We have all of these stacked lows right here. We have big displacement to the downside, and all of this right here looks to me like this would become a low resistance liquidity run, right? It's not like we're going to come down, sweep this, and bounce. It's not like we're going to come down, sweep this, and then bounce. We're going to sweep all of these lows first if we're going to bounce, right? So I'm expecting us to come into this 5-minute fair value gap. So I'm waiting to take a long, and I'm waiting to take a short, and we get a big move to the downside. So at this point, I'm still waiting. I haven't taken any sort of entry yet, right? Everybody's freaking out. They're like, "Oh, we missed our entry. Oh my god!" And a lot of people are starting to question whether we should take shorts or not. And the reason is because they say, "Justin, we just swept this internal sell side level. Why are shorts still valid?" And I say, "Wait." So we come up. What am I still waiting for? I'm waiting to see this 5-minute fair value gap get tapped into. Right when this gets tapped into, I add half of my position, because I want to see the rejection first. So I enter half of my position right here on this initial fair value gap. Now, The reason why I'm not worried about this sweep is because this sweep is an internal sell side level. This internal sell side level is only going to give us as much displacement to most likely reach discount of this range. This low is not going to push us to new highs most likely because, again, which one am I going to take more into account? This internal low that we just swept or this 1 hour high that we just swept, right? Which one has more power, do you think, right? So what I'm waiting for is once we get back into this. Okay, so let's say this is why risk management is so important. Let's say I was wrong here. What is protecting me? Me entering half. Because if I enter half my size here, which I do, and I put my stop at this high here, or wherever it was, and this fair value gap gets ran through and I get stopped out, I'm taking a very small loss there. I'm taking, half of what my normal loss would be, right? Okay, great. So now what am I looking to see for me to add to this position? I'm looking to see signs of rejection, meaning break a structure to the downside, possibly a fair value gap, or just to break a structure to the downside. So I add, I'm waiting, boom. Big displacement to the downside. What am I waiting? Pull back to fair value gap. Boom. Pulls back to fair value gap. That's when I add the rest of my position and I move my stop. Notice, instantly sells back off. So now, where I added right here, this is what risk management is. I want you guys to pay attention to this. This is how you manage a position. I initially enter half size here. I put my stop at this high, right? Decent amount of room here. This is a decent amount of room, but I can afford to have a looser stop because I'm in half my size. Once I enter the rest of my position size, I move my stop to this high, very, very tight. And look where my average now goes. Probably around here, right? My average now gets filled to around here because I just added around double my position size, right? So now look at the risk on this trade. Look at this. I am risking almost nothing on this trade. I'm in full size, but look how tight my stop is. This is how you wait for quality and wait for confirmation of so many things, right? When we were talking last night about overlapping models and waiting for extra confirmation, waiting, how to manage your position side, how to present yourself from, taking fat losses, how to present yourself from blowing up. The reason that I'm profitable is because of this. I can take 5 losses in a row and then take 2 wins and make back all of those losses, right? Because I follow good habits. I focus on building good habits. I focus on having good risk reward, and I'm not scared if I get stopped because I know if I consistently repeat what I know and I consistently repeat these good habits, that the more that I can learn, the more that I can recognize my edge, the more I can gain experience with my edge, and the more quality setups I get like this, the more I'm going to be rewarded long-term for that. So I know a lot of you guys are, scared. When we take 2, stop outs in the morning and then later in the PM, we get something like this where we make back all those losses and more, being able to refine what that edge is, right? Figure out why that was good, why that was bad, or whatever it is. This is what we want to focus on, right? Being able to hunt. You're a sniper in this sense because we're overlapping models. We're waiting for that 5 minute to get swept or waiting for that high to get swept. We get big displacement back down. Now, I don't know if this fair value gap is going to get ran through or not. We're so far having a bearish model, right? So I enter half, wait for the rejection, and then I enter my full position, right? And then I don't touch it. I let my runners go. Now, at this point in time, I didn't even look to take off this low here. Now, a lot of the times I would look to take off at least half of this low, but I'm confident with this trade that if we're going to come down to this low, we're most likely just going to get a big push to go straight into that 5 minute, right? Because all of this becomes low resistance liquidity. We're not going to come down to this low and not just flush through all of these lows here, right? Look at all of these resting lows here on ES. All of this has to get ran through, right? This is what a low resistance liquidity run is. It is low resistance. All of these lows that are stacked here, that is why this internal sell side means nothing to me. I'm not scared that we're going to bounce here. I'm not scared that this move to the upside is just a retracement to then go higher because all of this becomes low resistance liquidity once that external buy side is swept. So once I get the rejection and we continue to show downside, it's a risk-free trade. I'm confident knowing the draws here just from experience. Let the market do its thing. And we get a nice push down straight into that 5 minute fair value gap. I take off 80% of my positions right here. I was in 5 contracts. I take off 4 right here. I put my stop to break even. Let my runners do the work. And then my runner ended up getting stopped up here around break even. So again, having the patience, waiting for the confirmation, overlapping models is when we're going to get high quality trades. We're going to get good risk management. And even if the trade goes against us, even if we get stopped out, we're following good habits. We're building good, strong experiences that are going to help us in the future, right? So even if this got stopped out, I would have totally been fine with this because I know that I followed great risk management, great position sizing. I managed the position really well. I waited for extra confirmation, added, then moved my stop, right? So all of these things that we focus on are good habits that we want to build and recognize that we can consistently replicate with our trading strategy, right? So those are the things that we want to focus on. So the stops that we ended up taking were, where was that ES trade that I took? It was at this right here, I think. So I ended up taking a not so good ES short here. And I want to talk about why this was not necessarily the best trade. Now, I did take a short here on ES. Looking at this point in time, we had this internal sell side swept on ES. Once we got this big displacement back down, I noticed that all of these fair value gaps were getting ran through, right? All of these bearish fair value gaps. And I noticed we had all of these stacked lows here. Again, same bias as before. I'm pretty confident that all these stacked lows are going to get taken. But the only thing that I failed to recognize is, again, the draw on liquidity was still higher. We hadn't taken that high out yet. So we're still going to go higher, right? So this was a little bit of a premature short. The only thing I can learn from this, again, looking at this, I would say this was more of a C setup. Because the only thing I have here is liquidity being swept and then an invalidation of that fair value gap. And then, equal lows. So not terrible, but just based on the action alone and the time of day, right? This is lunchtime. So it is going to be lower probability. But I was looking to see us reject this and then go back into that 5-minute fair value gap, right? Because I saw this 5-minute fair value gap got disrespected, right? Big displacement back down. I was expecting this to now become inverse and then to go into this 5 minutes. So again, looking at it right now, I don't think it was a bad trade, right? I still think, like, if I was to go back and look at just this replay, like here, like just going back into this, right? And looking at this trade, I would still, looking at this now, say the exact same thing. I would expect a draw on liquidity to be these equal lows, right? So I'm not, I wouldn't say this was a terrible trade. I would say this was a little bit just more rushed. I would say the risk management on it was fine. I only, the loss on this was very small. I lost, at like $200, $300 on the eval at this time. So I'm totally fine, risking that. But looking back, it was a lower quality setup, and the time of day was not right where it needed to be, right? All right. So, any questions so far? Make sure everyone's on the right page here. All right. Think we're good. Let's take a look at NQ action today and compare the differences. Again, look at NQ, guys. This, you do not want to trade this, guys. You don't want to trade this. Like, just look at this, right? Look at this action on NQ. We were stuck in this range the entire day. We literally did nothing. Up until this point, you should not be taking any trade. Now, what is telling you just by this chart that you should not be taking a trade? Almost every inverse, every fair value gap is getting disrespected. Bullish and bearish. We're stuck in a range. We're chopping. All of this intraday action, bullish fair value gap gets ran through. Bearish fair value gap ran through. Comes back down, runs through bullish. Come back up. Well, we create bullish. What are we expecting? Oh, maybe we're going to go long here. Gets ran through. So the draw on liquidity here is so off because, again, at this point in time, this is where I say, wait for something to get taken first. Don't take any trade in this zone until this high or this low is taken, and then look to take a trade. That's going to save you from a lot of heartache because you're going to be trying to scalp every little fucking move in this area, and you're just going to get chopped back and forth if you're not focused on scalping, right? Because you're going to focus on getting, targeting this high or targeting this low. And that's normal, right? Like, again, looking at this action on NQ, I would expect us, if we're continuing to hold this 5-minute fair value gap, right? We come down, we sweep that low. I would expect us to go to that high, right? But We don't. We come up, sweep this internal, then go back low. And okay, now if we sweep this, what would I expect? This low. Oh, wow. That never even got taken. So when we can see this action on NQ, this is unfavorable market conditions. This is what you want to be able to recognize and say, hey, Justin, I can recognize action. We haven't gone anywhere the entire fucking day. We had a range-bound move in the morning that created the range. We haven't broken out of that daily range that was created in the first 10 minutes of the market. Maybe it's best not to take a trade today. Maybe it's best to, if anything, lower my size, right? Even if I am going to take a trade, let's lower my size today, depending on, looking at the action and based off of. So just looking at this, we did take a trade on NQ. Again, looking back on this was a fine trade on NQ as well. So I did take a long here on NQ. This one got stopped. And let's review this trade as well. So going into the morning, right? NQ, we swept that sell side level. Big displacement back to the upside, disrespecting this 5-minute fair value gap. This is what I'm expecting us to come back to, is this inverse fair value gap, and then look to go towards that high. And this is what I would want to see the draw on liquidity to be at the time. So I zoom in on the 1 minute. Again, we come down. What am I looking for? Big displacement to the upside, right? We get our break of structure intern right here, and we end up having a straight up move to the upside. So now at this time, my entry for this trade was a little premature, because at the time, I was looking at this 5-minute fair value gap that we were in. We were in this 5-minute fair value gap. The inverse fair value gap was here, though, so we would never retrace back into the inverse yet. But what am I waiting for at this time? Now, at this point in time, I'm looking at the, pull back to the downside, and I'm looking to expect the draw on liquidity to be that high, or at least this high first, right? So we end up coming down. Now, the reason why this was not a good trade, again, in my opinion, this was a good trade, but the reason that was not a good trade, and what I failed to see, is I was looking at this leg move for discount. And if I'm looking at this leg move, this is where we reach discount. But for this entire price leg that we created here, we had not yet retraced a discount. But look when we actually did retrace discount. Right when we did retrace discount, we had a straight up move to that previous high. So the long I ended up taking was, we came in, that 5-minute fair value gap got a big displacement. We got a big bounce back to the upside. I waited for a pullback into that fair value gap. Again, overlapping models at this point. I entered long, targeting that high and then that overall external high. Put my stop at this low. And then I ended up getting stopped out here, right? So why is this not a good trade? Again, looking back, not yet retraced a discount. If I was to wait, take a trade here, which I actually was looking to take a trade, but at this point in time, this would be my break, and I never ended up getting that fair value gap entry right there. So if you would have taken a trade here, you would have entered off of the break of structure. But again, in my opinion, that is a little bit hindsight. I would have looked to see the exact same thing, but it ended up being a straight up move to that high, which we actually ended up creating equal highs, which then became a target in future price action. But again, at this point in time, after this move, I'm not looking to take any trade. Again, looking at this action, everything is getting disrespected. There is no movement, no high or low being targeted. There's no clear draw on liquidity anywhere in this chart, right? The only thing that we know is the draw is these equal highs. We know these equal highs are going to get taken, but we don't know when. I have no idea when these equal highs are going to get taken. So when you don't know when and you can't recognize time, and this is what the action looks like, wait for them to get taken first and then fucking act on it, right? Now, again, I know we want to target liquidity. I know that's, a big part of our edge is recognizing the draw and then taking trades based off of what we think the draw on liquidity is. But sometimes in this specific kind of action, when, unfavorable market conditions, the best thing that you can do is wait for one of those highs or one of those lows to be taken first, then look to see the reaction. Because a lot of the time, once that high or once that low is taken, you'll see action start to smooth out, right? Just looking at this alone. Look at the action here versus here. Right when we ended up taking that high, we get a nice move to the downside, a nice straight up retracement, and then a nice clean move back to the downside here, right? All of this is chop, 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 chop. Oh, big move up. Oh, big move back down. Oh, big move up. Like this is all just going to fuck with your head. You're going to end up, tilting. This is where accounts are blown right here. This is where accounts are blown because you can't recognize conditions and you can't learn to step away. That's what I want you guys to learn, is focus on when things are unfavorable and when things are favorable. And learning to take a loss and step away is one of the most important things to do as a trader. Because, again, trading is not about winning. Trading is about losing. How well can you take a loss? I don't care how you do when you win. Everybody is going to be happy when they win. How do you handle your losses? That is how you can really attest to how good a trader is I want to see what you be and how you behave when you lose. Because the best traders in the world are good losers. And if you can't learn how to lose and learn how to save yourself from future losses and control your mental when you lose, it is going to be very hard for you to stay in this game. Figured out I need to wait for more prominent highs and lows to be swept along with better market structure shift, like taking prominent highs and lows and recognizing its higher time frame market structure shift I need to play off of. Exactly. Always zoom out, right? Because sometimes, you know, if you're bearish on a smaller time frame, you know, that high being taken could be a market structure shift on a bigger time frame or, you know, something else on a different time frame. So always having that, you know, bigger time frame analysis, waiting for overlapping models is when you're going to get the highest quality setups possible. How'd you get this smart? It's just a lot of time and thousands of hours. The 3 p.m. ES trade? Yeah, we'll go over that trade one more time. Again, what are we looking for? I'm not looking to take any short here. Internal high being swept. I don't care about this. Once this gets taken, right, that external high, it's a clear high here, right? We have a clear high, right? There's nothing to the left of us, nothing price action. We have these equal highs up here, but this is significant, right? Here, this is right to the left of us. We have, you know, a lot of room here. So this is what I believe the drawn liquidity is. Once I see this get swept, I'm looking for displacement to the downside, right? Boom, 5 minute, big sell off, right? What is that telling me? The drawn liquidity is going to be whatever that opposing liquidity pool is. I'm looking at all of these lows to get taken, right? Now, again, that's why I took that short earlier, as I was expecting these lows to get taken then. But I didn't fail to realize that the drawn liquidity was still higher. Now that that draw has been taken and we're having displacement back down, that is when that opposing PD array is going to be that target. So what do I wait for? Come down, pull back to a discounted fair value gap. I enter half my size, wait for the rejection. Boom. Once we get that sell off, I pull back into that fair value gap. I add the rest of my position, move my stop to that high, and I let the market go to that 5 minute fair value gap that we never tapped into earlier in the day. One minute NQ, was it an okay entry? Again, at this point, it's like there's no structural context for me to take any trade here, in my opinion. Again, we're just shopping. I wouldn't look to take any trade in this area until that high is taken. Again, this is just building good habits at this point. Because a lot of the times when you're trading this action, you're going to take that kind of trade and you're going to get stopped out a lot more times than you are going to win. So it's better to learn just to not take any trade in this area at all until that high or that low is taken. Can you go over when you consider fair value gaps officially disrespected? I notice it's not when a candle body closes outside of the fair value gap. Do you need the next candle to open outside the fair value gap? Been getting faked out on the 1 minute. Well, first thing is zoom out of the 1 minute if you're getting faked out. Second thing is when I want to see an inverse, I need to see that fair value gap get disrespected. Like it should be clear to you. It should be clear to you at that point. Like for example, when we look at NQ, right? And I'm looking at this 5 minute. Hey, we have a 5 minute fair value gap here. Wow, this just got absolutely fucking ran through. It's not even a question. It's not even a question that this got disrespected. Okay? Look at the entire day. Notice how we never break a single time through this. We come down, bounce, come down, bounce, come down, bounce, come down, bounce. We bounced 1, 2, 3, 4, 5, 6, 7, 8 times off of this inverse fair value gap the entire day. This was a complete support point the entire day for this. But it's clear to us this bearish fair value gap got absolutely ran through, right? It's clear to us. So it should be clear when looking at some sort of inverse. And a lot of it is, again, the more experience that you have, the more you can recognize it, the more confident you're going to have with inverses and stuff like that. Trey, the biggest thing I'll say for that, Trey, is understanding what setups to take, what setups are the best not to take, is just gaining experience. The more experience you'll have, the more that you fail, the more that you succeed, you'll start to see in certain cases where you would expect a winning trade, right? Even if it's an A+ setup, sometimes that A+ setup will get stopped. And you'll have to realize and try to figure out, why are these setups not working, all right? What am I failing to see? Now, a lot of the time it could be, okay, the draw was I failed to see that the draw and liquidity on a bigger time frame is actually higher. We never actually maybe validated this. We never had break a structure through this lower knot. We never had this. Okay, it's time. It's 10 minutes into market open. It's 10 minutes before market close. It's lunchtime. It's, we never took that initial low. We still have equal lows below us. I shouldn't have taken a long. All of those things are things that are going to, you'll realize the more that you gain experience with trading strategy. But again, you got to fail. Like, that's why I'm saying, guys, failing is a good thing. If you're not failing, you're not fucking trying. Everybody listen to that again. If you are not failing, you are not trying. Okay? Failing is good. You are learning. You are gaining experience. That is a part of the game. You have to fail to gain experience and to learn. So, when you fail, use it to your advantage. Don't sit and fucking cry about it and be like, oh, fuck me, I suck, I took this fucking mistake. Go back, figure out what you did right, what you did wrong, and use it to your advantage in the future. Instead, it's all perspective. Learn to be optimistic. Use your losses to your advantage. If you did something wrong, say, hey, Justin, I shouldn't have done this. We're going to fix this in the future. If this happens again, I'm going to beat my ass for it, right? Hey, this happened. Let's, continue to do this. Let's not continue to do this. Right? Failing means that you are learning and gaining experience. Exactly. Fail hard and learn even harder. Why don't you take entries off just liquidity sweeps and break a structure? Wouldn't that be better RR? No, that's worse RR. Because you're taking the break a structure. Fair value gap, you're taking the pullback. I mean, it depends on the setup, to be honest, because there's some times where you wait. But again, how many times, I want you to backtest that. Go and look at a 15-minute high or whatever it is you're looking to get swept and take the break of structure and look at how many times you're going to be faked out. And how many times your RR is going to be terrible. Like, for example, let's take this, for example, right? Let's say I was to take this short. Now, this isn't a winning case, too. This is an actual winning case. Like, this would be a winning trade, but let's look at the RR here, right? For me to take this break of structure, for me to recognize this as a break of structure, I have to get a move through this low, right? This candle does not mean anything to me. This candle does not mean anything. This candle does. All right, now that we're broken through this, all right, let me enter short. I put my stop at this high. What's my price target? Whatever that recent low is. This is literally a less than 1 risk reward. Or you reach this low, and that's still 1.15, and that never even got touched. But your stop has to be that high, right? So instead, most of the time when we wait for a fair value gap, I wait for the initial pullback and then put my stop at whatever the wick high is at, and then wait for the rejection or whatever it is. But break a structure, a lot of the times you're going to get faked out. And this isn't a winning case. This isn't a winning case. A lot of the times you're going to look for a 15-minute high or whatever that is being swept, and you're going to get faked the fuck out. When you journal, have 2 tabs, winners and losers, and study those losers over and over again. See the patterns and keep returning. Yeah, absolutely. I 100% agree with that. That's great. What's the best way to implement ICT concepts into real-time trading? Experience. Just start, and the more that you do it, the more easier it'll become. That's pretty much all. It's all it is. Again, when I, like, guys, everybody asks me, it's like, what book should I read? Like, or what video should I watch? Like, stop watching, stop reading, and start doing. You're not watching books. Watching thousands of videos is not gonna do anything for you. You think that, like, if I watch all of these fucking videos that I'm gonna somehow be, a magical trader. You have to actually learn to implement these things on your own, fail using these concepts, figure out what part of these concepts work, what part of these concepts don't work, and then use your experience to your advantage. Every trader is completely different. Every trader has completely different experiences. Use your experience to your advantage. That is the whole point about being self-sufficient. Every self-sufficient trader, every trader that is actually successful in the space will tell you they had to fall on their fucking ass a lot for them to realize what works, what doesn't work. How should I look at the market? How should I not look at the market? As many videos as you want, it's not going to do that for you. You have to actually put in the time, implement the concepts, figure out what works and what doesn't work, and continue to gain experience with it. All right, so let's jump into what we're looking at going into tomorrow. So looking at ES, first thing I want to look at is, let me clear the charts here actually a little bit. Take all this stuff off here. Actually, I will keep that high being swept. All right, so looking at the daily, we are still holding this daily fair value gap. So I'm not going to lie, as much as I want to be bearish, if we continue to get displacement to the downside, I will be bearish, but we are still holding this past imbalance here. So one thing I do want to pay attention to as well, though, is we do have these stacked equal lows here. So for me to be bearish, I have to see these fair value gaps get ran through. So zooming into a 15-minute, actually, there's really nothing here. That's the hard part. I guess we have this 5-minute, but I would want to see this 5-minute get ran through. If that gets ran through, I would expect the draw to be here. If that gets ran through, I'd expect the draw to be here. But at this point in time, my bias is leaning a little bit more bullish, just based off structure alone. We're holding these fair value gaps. We get big displacement back up. We're overall in a bullish trend. I would not be surprised if we go into tomorrow and we end up taking this high here. So I am bullish on ES going into tomorrow. The only way I'm going to be bearish if we get continuous selling pressure in the overnight session, then I would expect the draw on liquidity to be those equal lows. Looking on NQ, daily time frame, we've now retraced back to discount of this range. Now, I still want to see us go a little bit lower. I still would want to see us come into this daily fair value gap, so I do expect the draw on liquidity to still be lower on NQ. But looking at the daily, we do have this daily fair value gap here, and I do believe that this could be our buy side level that we should be watching. This is a clear buy side level. So going into tomorrow, this is going to be a clear buy side level that I want to have marked on my charts. But we actually are forming a very big bearish SMT. So going into tomorrow on NQ, I am bearish. I would like to see us come up, though, in the overnight session and possibly sweep one of these highs to then look to go lower. So going into tomorrow, I would like to see a little bit push to the upside in the overnight session and then look to take us back short later in the day. Yeah. I'm going to mark out this past 30-minute fair value up here as well. Any questions? How much are you up on the funded? 2K. Would you be able to start going over exactly what you see and how you react to information given before each trade? I do. Or at least I try my best to. But in the live session, I'll tell you exactly what I think, why I think what I think. And in the live sessions, if you have any more questions, always feel free to ask them as well. 3 NQ contracts and 5 ES. I'll mostly do 2 NQ and 4 ES, but if I'm confident in a trade, I'll add more contracts, especially with the evaluation. I think it's always, doing evaluations accounts, I think it's always best to add contracts the more confirmation you have to take advantage of those moves. All right, guys, that is all I have for you guys tonight. Enjoy your night. I will see you all tomorrow morning. If anybody has any further questions, again, always feel free to just @me in the Discord, and I'll help you guys out. But hopefully you guys learned something from tonight's session. Again, I love doing these with you guys. I hope you guys get something out of this. I'm happy to start seeing more people show up to these charting sessions, and I'm hoping that you guys are getting a lot out of this. So, yes, again, do be careful. We do have a lot of news this week. We do have FOMC on Wednesday. I won't be trading on the AM on Wednesday, but me and Johnny will be doing a PM session on Wednesday in the afternoon. All right, guys, enjoy the rest of your night. I will see you all tomorrow. Peace.